Critical Man Pictures presents the Forex video training series, Green Belt Course, Average Directional Index. One of the quandaries that traders will often wrestle with is how strong the trend, if any, may be on the chart. There are numerous ways of quantifying whether or not the chart is showing an uptrend or a downtrend, but many of these methods fail in telling us whether we're seeing actually a trend or a range that could be potentially detrimental to a trend strategy. Please allow me to explain. One of the more common indicators used for defining trend is the moving average. Traders will often look at the trend being to the side of the price trading relative to the moving average. Here's a chart with one of the more common moving averages, the 200 period daily applied to the pound dollar. Notice the downtrend on the left side of the chart and the fact that price is trading below the 200 period SMA at the time. While the strength of the downtrend did take price to lower levels, notice after hitting the bottom shortly before February 17, 2009, price began to pick up, beginning an elongated move upwards until price crosses up and over the 200 period SMA. Traders opening short positions on 2/17/2009 based on the trend as displayed via the 200 SMA may have been looking at the rough prospect of this reversal moving against them. After crossing the 200 period SMA, price begins to congest in a volatile manner. Traders using the 200 period SMA to identify trends at this point might have a difficult time with long positions, as it appears the move upward had stalled. This is where ADX can help. The average directional index will not show us whether we are seeing an uptrend or a downtrend, but it can help see us if there really is a trend at all. ADX can be plotted from 0 to 100, although readings near 100 are rare, and the higher the reading of ADX, the stronger the trend has been seen. On the next slide, you will see ADX applied to the same pound-dollar chart we had looked at previously. A horizontal line was added at a reading of 30 on the ADX. Many traders will use this as a cutoff on the indicator, identifying trends as readings of greater than 30 or ranges of readings less than 30. Notice the bottom of the downtrend highlighted in yellow. At the time, to the astute trader observing ADX would notice that the indicator is below 30, signifying that we may not be looking at a trend, or at the very least, the trend may not be considered strong. Shortly after the reversal to the upside takes place, despite price still being below the 200 period SMA, ADX begins its run, climbing above 30 and eventually rising to over 50, indicating a strong trend. Traders looking to employ trend strategies or placing trend trades can simply filter trade ideas with the ADX indicator. The next image shows ADX with notes on how traders can potentially look to incorporate this indicator into their approach. If ADX is above 30, the trader can look to trade with trends with their trend strategies. If ADX reads below 30, the trader can look to ignore potential trend trades as any trends exhibited on the chart have not registered as strong. The important thing to keep in mind with ADX is that it can be a great tool for indicating trend strength, but it will never show the trader the direction of the trend.